Good morning, everyone. Thanks for joining the presentation. I will be making forward-looking statements. Encourage you to become familiar with this risk factors and safe harbor in our 10K. So if you are interested in gold exposure and you appreciate dividends and yield, you're in the right presentation. You're also going to see we're very financially solid, no debt, about 40 million cash in the bank. We're a highly profitable operation. So an overview, we have a unique business strategy for the mining industry. We are garnering equity and yield valuations, which is pretty rare in the mining space. We have experienced management, which I'll touch on. We're in the premier mining jurisdiction, and this is one of the most important aspects, I believe, of the mining space today. Mining-friendly jurisdictions are becoming increasingly scarce, and we are in Nevada, which is arguably the premier mining jurisdiction in the world. We're a gold producer operating a low-cost open-pit heap leach, which I'll touch on. We're high-grade. Many, if not most, miners in this space, the majors included, chase 0.5 grams. If you're unfamiliar with what that means, I'll highlight that throughout the presentation, but we're chasing open-pit heap leach potential north of a gram. So we're multiples of the grade of most mining companies, which translates into high margins, which translates into our ability to pay a dividend. And that is what really distinguishes us, is we're a dividend-focused company. So again, our unique strategy in the space, we target projects with low operating costs, strong return on capital, and high margins. We want to grow organically, remain debt-free, and distribute substantial dividends. And we have an ultra-tight capital structure from which to distribute outsized dividends. If you don't know this, most explorers in the space have hundreds of millions of shares outstanding, and many producers have 500 million to 1 billion shares outstanding. We, as a gold producer, have just less than 24 million shares outstanding, and you'll see the impact of what that can do. Basically, we have transcended being just a gold equity. We have tapped into a pool of investment capital much larger than the gold space itself, and that pool of capital chases dividends and yield, and you'll see why that matters at one of my last slides I'll show you, in which we outperformed almost our entire peer group last year. So management, in my opinion, are the most important aspects of any company. We have experience. I was previously CEO of a company called Gold Resource Corporation. I was with them for 15 years. In 2020, we spun out Fortitude Gold into its own company called Fortitude Gold out of Gold Resource in 2020. But while there, I had a decade of production, 10 consecutive years of profitability. We generated over $1 billion in revenue, and we distributed $116 million to our shareholders in dividends. We built 2 mining units and 4 mines. So we know a little bit about the mining space and how to operate in it. This is our production profile. The dark bars going out to mid-2025 are our current resource from our Isabella Pearl, which I'll talk about, open pit heap leach. And then the last 3.5 of this are what I target in the near term of our next mine that I'm targeting to bring into production. And in the next couple months, hope to make a development decision on that. Once that happens, assuming it does, that'll push our mine life out to 2028. Which will satiate one of the biggest pushbacks I've had thus far is, are you going to be around long enough? So that is my goal, is to demonstrate to shareholders we're going to be paying a substantial dividend for a very long time. We operate Isabella Pearl, which is an open pit heap leach. Golden Mile is the next project we target putting into production. I'm not going to read the milestones, but I want to highlight 2. In the middle, I'm proud of the fact that we got Isabella Pearl into production in just 10 months from groundbreaking. It should have been 6, but I fought the whole time with a really bad contractor, and we still got it done in 10 months. The next milestone I'm after is making a development decision at Golden Mile. Isabella Pearl is a special mine. It's not huge, but it has launched Fortitude into gold producer status with an incredible grade of 3.75. Come back to what I said earlier. Most mines chase 0.5 grams. And this demonstrates it tremendously when you look at these mining companies both past producers and current in the dark bars, notice that very few are close to 1.5 grams. In fact, most of them are 0.5 grams. Isabella Pearl is 3.75. This was what drives our company. In our industry, there's a saying, great is king. We're operating from a really special mine here. What differentiates us with all our peers as a junior producer is our dividend. If I compare us, and I have to compare us to the majors, I know it's not an apples to apples comparison, but the juniors don't pay dividends. Newmont, Barrick, the big hitters, if you invest in them today, you're lucky to get 2%. You're going to likely get sub 1% yield. Fortitude, you're 6.5%, pushing 7% yield. So we beat all our peers, basically. If majors could be considered peers, I should say, we beat everybody in the dividend space. We have a great project pipeline. We picked up all these properties back in the bear market when nobody else was looking in the area of Nevada where we are situated. And now there's tremendous competition. I could never do this today. But we have Isabella Pearl in production, 2 mines, Golden Mile and Mine of Gold in delineation phase, exploration at East Camp County Line and Ripper. I'll briefly mention each of them. But we have, I believe, the best properties in this particular area of the Walker Lane Mineral District. So our exploration focus is to delineate known mineralized zones, discover new ones, and create project longevity. These are the 6 properties, 5 of which are all located within 30 miles of each other on the Walker Lane Mineral in the large star there. You'll see the importance of that later when I talk about the synergistic approach we have. We recently picked up Ripper here, which is in north central Nevada. But we own 100% of all of them, and none of them have over 3% NSR. So we're situated in a really good position in owning the properties. Again, if you're unfamiliar with grade, keep in mind 0.5 average grade. All our properties have potential to be north of 1 gram, and that's what we chase. Obviously, Isabella Pearl is exceptional. Golden Mile, I'm going to show you how that initial resource is north of 1 gram. Again, multiples of what typically is mined, but all our properties have potential to be north of 1 gram. Again, 30 miles from each other, and I'll mention the synergistic approach toward the end. If all we had as a company is Isabella Pearl, we have 5 other properties, but if this is all we had, I'd be very excited. We've locked up 10 kilometers of this important trend, and I'm not just calling it a trend. If you look off of our claims, which is the gray box, and look at the past producing mines, across the road you can actually see Santa Fe, the reclaimed Santa Fe mine. They did over 300,000 ounces. There are other mines on this trend. This is driven by geology. This is what you want to look for. This is what you want to see if you're going to find additional deposits. But Isabella Pearl is the next on trend. So we have numerous targets. We'll develop numerous more. They all won't be deposits, but I believe many of them will be. So I think we'll be operating from just this one property for a very long time. Switching gears to another property, Golden Mile. This is the next mine I believe we'll be developing. It's in the initial resource has been established stage, and we're designing and developing, or almost developing this. It's a district-sized land position. There's known areas of mineralization, and we are moving it forward to try to make this development decision by mid-year, where we've done the metallurgical tests, which are excellent, 85% recovery in a lab. We've designed the open pit numerous different ways to optimize it. We're having Kappas Cassidy out of Reno, which is an engineering firm, help design and build this. So we're moving this forward. But note the initial resource grade, 1 over 1 gram. This is excellent for the space. Again, if it doesn't mean anything to you, keep in mind, most people chase 0.5 grams. These are some of the historic drill results to highlight how special this deposit is, or this potential deposit is. A couple weeks ago, a couple days ago even, we came out with a press release on new drilling at Golden Mile. And if this interests you, I encourage you to take a look at it because they're phenomenal results. We hit almost 38 meters of 4 grams gold. Again, put that in perspective, that's phenomenal. So I believe Golden Mile will be another exceptional mine like Isabella Pearl's been. I'm going to switch gears to East Camp. East Camp is a district-sized land position. On the south of it, it has this lithocap that this geologist is standing under. It's a silica lithocap that if you have one of these, in and of itself, it doesn't mean anything, but when you have one that's associated to high-grade gold, this could be the Yanacocha, the big multi-million ounce style of deposits of the world. This geologist, our geologist, can go around the eroded margins of the lithocap and get as high as 5 grams gold. So we have a lithocap associated with high-grade gold. We could potentially have one of these home run style deposits. We're swinging for the fences on this. On our first drill program, we were just drilling to look for structure and we already hit mineral. So we're going to chase that hopefully down to where would be you chase mineral as the intercepts get wider and thinner, but ultimately hopefully goes down into the throat of the system, and that's where you could potentially have a large deposit. This will take a long time to explore, but we're swinging for the fences. If we swing and miss, this property is such a district-sized land position. If you go to the north, you have these kind of high grade. Again, keep in mind, anything north of a gram is excellent if you're not familiar with grade. So this property is awesome, in my opinion, because it has a potential to have a massive lithocap style deposit, which can be a game changer for the company. And if not, we have a lot of high grade veins. We think we can discover another deposit there as well. Switching gears quickly to mine of gold. We've drilled this surface and near surface gold. It's on patented ground, so now we're applying to drill off of that patented ground because the mineralization is going off of that. And then County Line is just 14 miles up the road from Isabella Pearl. It has old historic open pits. On the other side of this mountain is the past producer Paradise Peak at over 1 million ounces they produced. So it's in a great neighborhood, and it's got a lot of potential. And we're now looking at potentially drilling some of the remnants of the open pit and see what kind of grade we can get and maybe just truck it 14 miles down the road as a synergistic approach to start a production from this operation at some point in the near future. Ripper's our most recent acquisition. We get pitched all the time now because we've demonstrated that we can build mines and smaller, if you will, mines. We don't have the threshold of 1 million, 2 million, 3 million ounces that the majors have to create a mine. We can do it for a couple 100,000 ounces. So we got pitched this and we couldn't turn it down. This has a lot of potential, but it's really early stage. So, as I mentioned, we have a synergistic approach where we want to ultimately have all of these projects. Obviously, we hope there's multiple deposits, at least one on each. And then build a process that takes gold to the carbon phase only. And then truck the carbon to our permitted ADR, operating ADR. When we went to get the permit for the Isabella Pearl, what took the longest is the ADR. What costs a lot is the ADR. Why not leverage that? And so in doing so, we think we can substantially shorten permit timing, construction time frames, and obviously CapEx spends. So we want to be able to put mines in production faster and for less money and leverage the existing operation, all because it's within 30-mile radius. We are, if you invest in us, are gold-dominant revenue, and we love that. So many mines obviously have multiple minerals. It's just the nature of a lot of deposits. There's a lot of silver here, but we can't recover it metallurgically. So we produce just about 1% of our revenue is silver. This is a gold investment, is the point. Now, as I mentioned earlier, I used to be with a company on the New York Stock Exchange called Gold Resource Corporation. At the spinoff, I left and went with Fortitude, and basically most of my team did too. So I'm very fortunate that I've worked with these guys. We have over 100 years of experience just between those four, let alone the rest of the team. And I think it speaks a lot of volumes that these guys were willing to come over to a junior now OTC listed company working its way back up to the New York Stock Exchange. I think it speaks volumes they came over to Fortitude Gold. The same with our chairman. He was chairman of Gold Resource Corporation. He came over and he's now chairman of Fortitude Gold. So I love it because I'm working with these guys I know can build mines and execute. And ultimately, like I said, people are the drivers of everything. We take very seriously our ESG third-party safety audits, adhere to SASB guidelines. But to highlight our capital structure, again, I want to repeat this. Most junior explorers have hundreds of millions of shares outstanding. Most producers have $500 million to $1 billion. You can find the biggest deposits in the world, and if you have billions of shares outstanding, you've capped what you can do for your shareholders. We have just, as a producer, 24 million shares outstanding. big difference. You have to watch out for your capital structure if you're ever going to be a dividend payer. And this was created to pay dividends, so that's why we're here. No warrants, no debt, no hedging. As of 12/21, $40 million in the bank. That'll change because we announce our results, our financials, the end of the day, and a conference call tomorrow morning to update this. But good capital, market cap, good liquidity. Our 52 low was 75 cents, 52-week high, 8.94. Yield at about 6.5%, but management are the largest shareholders. Note this. We have no institutions in our shares to speak of. We have a few, but no gold. None. I presented the Dimmer Gold Group, which is one of our biggest gold events in the space. And I'm going to show you in my next slide, we were one of the best producers or the best performers in 2021, and I have no gold funds. That's not what's driving our stock, and I don't mind. Why? Because in the downturn, when you have a bunch of gold funds, it's a self-fulfilling prophecy where they get redemptions and they blow you up on the way down. 83% of my shareholders are retail. Sticky shareholders who, as long as you're paying them dividends, they're happy. So the investment thesis. High-grade gold in Nevada, best mining jurisdiction, arguably. Run by experienced management, open pit heap leach, and we're focused on dividends. What does this translate into? In 2021 was a brutal year for the gold mining companies. This is my peer group. I'm not in the GDXJ. My previous company was and is Goro, but Gold Resource, but Fortitude's not big enough yet. But look at the peer group. Their share price went from the upper left to the lower right. It was a bad year for gold companies. Not Fortitude. Why? Because we have a different business model. We started trading in March, and our share price goes from the lower left to the upper right. And that is because we have transcended being just a gold equity, and we've, again, tapped into that pool of capital bigger than the gold space itself. That pool of capital are investors that chase dividends and yield, and we beat all our peers as a junior company, not impressing anybody in the space. Oh, we're only doing 40,000 ounces. Think about that for a minute. We're only doing 40 right now. Wait till we do more. But this differentiates and substantiates, in my opinion, it's a superior model. So the last slide I'll show you is this is what it's resulted in. We target gold investors, dividends, yield investors, and yield valuations, and that results in multiple valuation metrics. We've done that. We're executing. We're generating cash flow every day. We're distributing dividends, and we target our second mine build. I think perhaps when we come out with that news, that could maybe add a growth premium to us, but we're garnering a market premium yield valuation. We're doing that. And then the final touches on the last slide I showed you. We're demonstrating that this unique mining business model is superior to all other gold equities. How is that we buck the trend as a junior producer? And everybody else had an awful year last year, and we had a stellar year because we have a different and better, arguably, business model. Many more slides I won't go into unless some question touches on it, but with that, we have quite a few minutes if anybody has any questions.
So for Isabella Pearl, you know a bunch of other potential spot you guys would be mining. Right now it runs your estimated life on that.
Yep.
Is your expectation that the useful life of Isabella Pearl through those other projects gets extended meaningfully?
It's a great question. Isabella Pearl itself, we're not going to drill the margins and expand it dramatically. But what's happened at Isabella Pearl is that we actually added a year of production over the last year, not from the drill bit. So get your head around this for a second. When you go and drill, ultimately, the resource model, they cap high grade. It's not that we didn't know we drilled through it, but it's industry practice to cap it. So if you go through a big high grade pocket, they cap it down more to the average grade. But when you go mine it, it's there. So to date, our tons that have been mined to date have exceeded the estimated grade, and therefore, out of the tons we've mined to date, we've added 1 year of production. So if I was here last year, I would have said we'd be out of ore at Isabella Pearl in the middle of 2024. We added a year, now it's 2025. There's a high probability that will happen in the next 3 years going forward. Why? Because we know 80% of the mineralization is in the bottom of the Isabella Pearl, and that's the highest grade. So we have lived and experienced the situation where the grade is higher and the tons we mine. That could continue. We cannot put and quantify an amount yet, so we're just going to have to move forward and live it. Expect, though, it'll be done in the middle of 2025, but don't be surprised if it goes longer. But that gives us plenty of time to get Golden Mile in production. Those were all of the properties. And no, this is just one small area of the Isabella Pearl trend, and that's called Isabella Pearl Mine. And so, yeah, at this point, from what we can quantify, it'll be done in the middle of 2025. And so we need another mine coming on production, and that should be Golden Mile. But I hope to just keep doing this until we find a major deposit, potentially like at East Camp, where it pushes us into a situation where we could go up in production for a decade. But the decade is the sweet spot in our space. Investors don't give premiums to mining companies that have longer than 10 years production. They demand you increase your production once you get out to that 10-year mine life. So we're pushing toward that 10-year mine life, and then then the demand will be, okay, so you're going to be around 10 years, increase your production, and that'll be one of the future things we chase. We're working on that as we speak. It's that actually the capital piece has been the biggest challenge because we're in a heavy inflationary environment. Anybody who tells you we're not, they don't know what they're talking about. We put out bids for some of this equipment, and they'll say, yeah, this bid is good for a month. Now they'll say it's good for a week. Get your head around that. How do you nail down a CapEx? And they're saying, we're not sure we can get the steel in a certain time frame. So we're actually bumping up against these issues where we're starting to buy equipment right now. We're going to sit on it for a couple of years. But the CapEx, to your point, is I believe we'll have plenty of cash that's in our treasury right now to build Golden Mile. I want zero dilution for this next mine because we are focused on a dividend. So, oh no, it'll be north of 20 million. But I don't know the full number yet because it's a moving target. But the more pieces of equipment I can lock under contract or pay with cash right now, then I can nail that CapEx down. But I didn't necessarily really let it sink in at how difficult it is to build something right now because of these moving targets and these supply chain issues. It's incredible. So point being, I believe we have plenty of cash in the treasury. We'll be able to build this with no dilution to shareholders so we can continue with the dividend. And, yeah, we'll just keep doing this hopefully over and over and over again. It'd be great if I'm at this conference 5 years from now and we have 24 million shares outstanding. That'd be the goal. Yes, sir.
East Camp, you talked about the fences there.
Yep.
How much does it cost for you to actually realize that, whether you can,
yeah,
whether there's something there or not, and then also what's the time frame to actually see that?
Those are good questions. I don't have the full answers because it's a function of how much you drill. We have 2 drills. We're on the cusp of getting a third, and I'm trying to get a fourth by the end of the year. I want to drill at East Camp. I want to drill at Isabella Pearl Trend, and I want to drill at Golden Mile, and I want one at County Line all year. And so I'm trying to get 4 drills. It's very competitive, and so it depends on how much we spend. Our exploration CapEx last year was $5 million for everything. I hope that we at least do that, if not more. How many years? To your question, how many years? It depends on how long it takes. This is a massive area. We have 7 different targets. It's going to take a long time to explore it. We could get lucky early. We could get lucky later. We could get lucky not at all. And then we'd move to the veins to the north. But I don't have those answers because there's too many moving parts. But as long as I have deposits that keep us in the game till 2028 and beyond, I think I'll be here long enough to be the one to find them because we're truly convinced we have them. We just want to be around long enough to find them. So I'm getting signs that I'm done in time. 1 minute?
We have time for
okay.
Are there any other questions? Jason, I want to talk about the dividend.
Yep.
You're like the dividend guy.
Yeah.
You did the dividend at Gold Resource. That was the focus. That
Yep.
was the now here.
Yep.
answers, if you don't mind me saying that,
Yeah.
the dividend.
Yep.
The focus is preserve the capital, and you have plans to build other mines, but at the same time, you're focused on the dividend. And you have $40 million in the bank, I guess I have a two-part question, which is one, what are you seeing in the dividend that maybe others in your industry aren't? And obviously, you're able to do it with $40 million cash in the bank. And
Sure.
Where did $40 million come from?
Sure. All but $10 million of that we've earned through our operation. $10 million came over in the spinoff, because when you do a spinoff, you can't let the spinoff company go to potentially fail, so you have to fund it. So $10 million came over in the spinoff. The other 30 we actually made. This is why we do the dividend. This is just proof positive. Hundreds of my peers had an awful year. I'm not impressing anybody with my 40,000 ounces. I don't care. I'm impressing my retail shareholders who want 6.5%, 7% yield. This is what does it. This is why this business model is superior. We did it with Gold Resource. We IPO'd at $1 and we hit a high of $31. We paid 75 cents, I think, at our high. Light bulb goes off. We want to do it again here. I'm not saying I can get to 30, but we're not going to be 7 very long, because it's that X factor that no other mining company can tap into if they're not created to pay a dividend. And then you can't pivot to pay a dividend. So I appreciate you calling us a mid-tier. We're a junior producer, and I embrace that. Even the majors, you can't all of a sudden pivot to pay dividends if you have hundreds of millions of shares outstanding. You can't do it. You have to have the business plan from the start to pay a dividend, and that's what we did at Gold Resource, and that's what we're doing here. It worked at Gold Resource. We obviously got tore down during the last bear market like everybody else did, because our dividend had to come down. But we're doing it again here. And this just shows you that the dividend is the X factor. So yeah, as a large shareholder, both in Gold Resource and Fortitude, I want my dividend every month. I don't have to sell shares and I get a big check. There's nothing better than that. And I think all the shareholders agree too. They like the dividend check. And in this day and age, anybody who wants gold exposure and wants to make money doing it, we're one of the few. You can actually get a good yield. If you go after the majors, which they have all sorts of reasons why you maybe should, but you're only going to get a 2% yield if you're lucky. Perfect. Okay.
All right.
Thank you.